This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi, how are you? Mathis Connor here with Connor Management Group, and today is Tuesday, November 4th, 2014. This week, we're going to look at the best overvalued stock to sell right now. And this company is in the drug manufacturing industry, and we see its 6-month downside potential at negative 21.9%. On to the second slide, and we see that the name of this company is called Teva Pharmaceutical. Their ticker symbol is TEVA. Once again, they're in the drug manufacturing industry, and we see the 6-month downside potential at negative 21.9%. On to the quick facts slide. We have a business summary description for Teva, and here it is. Teva Pharmaceuticals Industries Limited, together with its subsidiaries, develops, manufactures, sells, and distributes pharmaceutical products worldwide. The company offers generic pharmaceutical products and basic chemicals, as well as specialized product families. Its products include Copaxone for multiple sclerosis, Azilect for treatment of Parkinson's disease, Provigil and Nuvigil to treat excessive sleepiness associated with narcolepsy, obstructive sleep apnea, and shift work disorders, Ventura and Actique to treat pain and opioid-tolerant adult patients with cancer, and Amrix for muscle spasm and acute painful and musculoskeletal conditions. Excuse my pronunciations. I'm sure I didn't get all of those right. But as you can see and hear, Teva Pharmaceuticals, they developed, manufacture generic and some proprietary-based drugs as well. Their website is tevafarm.com. That's www.tevapharm.com. That's tevafarm.com. The company is headquartered in Israel. They were founded in 1901. The number of employees they have stand at 44,945. Once again, the ticker symbol is TEVA. They operate within the healthcare sector, and the industry they operate in is drug manufacturer. The annual revenues over the last 12 months for Teva was $20.5 billion. Their net income was $2.8 billion, and their cash from operations over the last 12 months was $4.2 billion. Teva's market capitalization now stands at $49.4 billion. This is definitely a sizable company. Onto the products and services slide. We have here just a list of descriptions of the different products and services they provide. We have something that says, okay, Teva provides a strong portfolio of central nervous system products, including Copaxone as well as some others. Teva provides high-quality treatment for people who suffer from respiratory disorders. Teva's oncology medicines are dedicated to improving the lives of people with cancer. There are a range of leading products, and they have a few more. But I think for the business description, you got a good feel for the kind of products that they sell. On to the metrics slide. Once again, the annual revenue for Teva over the last 12 months was $20.5 billion. The net income was $2.8 billion. Net cash from operations over the last 12 months was $4.2 billion. The operating margins were quite healthy and are quite healthy. In 2013, the operating margins were 33.7%, and in 2014, the operating margins improved slightly to 35.0%. onto the valuation metrics. The trailing PE ratio right now for Teva is 11.0, and the forward PE ratio is 12.0. And that's a relationship that you'd like to see on a stock you're planning to short. A forward PE ratio higher than the trailing PE ratio indicates that most analysts believe that the future earnings is going to decline. The PEG ratio is extremely high. It's at 11.3, also a sign of a company that's expected to have negative growth. The price to sales ratio is at 2.4. The price to book ratio is at 2.0, not too rich there. And the enterprise value to EBITDA ratio is at 9.6. The recent closing price for Teva was $57.26. The 52-week low was $36.26, and the 52-week high was $58.03. So Teva right now is trading much closer to its 52-week high than its low, that's for sure. The 20-day moving average is $53.17. The 50-day moving average is $52.77, and the 200-day moving average is $51.03. All of those figures are much closer to its 52-week high than its low right now. The average trading volume for Teva, it's traded quite well. It's at 3.9 million shares per day. The beta for the stock is 0.7, so this stock on average is less volatile than the market in general. The dividend yield is at 1.9%, not bad at all, and the average dividend payout ratio is at 24.0%. Onto the price chart for Teva, and this is basically a stock that has had a steady increase over the past year. The stock has increased approximately 57% over the last 12 months. It has enjoyed an appreciable increase, and it is in our opinion that it's increased a bit more than is justified, which is why we believe it's one of the best stocks to sell right now. The financial statement quality of Teva is excellent. It has very manageable level of debt. The operating margins trend is increased slightly. We consider it flat, and the price pattern trend has been increasing as well. Teva's increased quite a bit, and our overall market outlook right now in general is neutral. We don't see too many overvalued names versus undervalued names. Right now, we kind of have a neutral view on the market. The recent closing price for Teva was $57.26, and our 6-month price target for Teva is at $44.70. So part of the reason, or I should say, one of the main reasons for our negative outlook on Teva is that one of their leading multiple sclerosis drugs is going to lose its patent protection over the next year, and they're doing all they can to try to retain those customers, but they're experiencing quite a bit of competition, and most analysts believe that their earnings are going to suffer as a result. So as a result of a combination of relatively stretched valuations, and expectation that they are going to lose market share for one of their leading drugs, and that earnings are going to decline, we feel pretty strongly that Teva will be experiencing some headwinds over the next year, and that's why we believe that this stock has a 6-month potential of negative 21.9%. It does have a strong balance sheet, but we don't think that that's going to keep people in this name with such a strong headwinds and decline potential ahead of it. And so it's for this reason that we believe that Teva is the best stock to sell right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Bye. Hi, this is Matt Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why the stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to say, yeah, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Connor Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental technical analysis, and also considers some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnorMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares Content Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size was probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast of our thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to cmgstockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.